I've got 3 setups for your viewing pleasure today, gang. 3 setups that are on my radar for buys that are very much rooted in the current macroeconomic environment, accepting at least 2, if not 3 more rate hikes, one in March, one in May, one in June. And the more that we can forecast these, the more that Fed Fund futures can tell us, hey, this is what we're dealing with, the more that we as a trading and investing public can accept this reality and just move on to accept also that the tightening, the rate hikes are winding down. We're at the tail end of this event. If you don't know who I am, I'm Raghee Horner, and I am the lead trader over at Simpler Futures and also the Sector Secrets Mastery. We're going to talk about 3 setups, starting off with bonds. All right, let's get to it. Bonds are oversold right now. They're in a neutral environment. And as long as I can look at a neutral environment on bonds being oversold, the sooner we can get an opportunity, as we have today, to sink into a daily price movement range. That is what this is. It's daily volatility, forecasting, in this case, support. We had our first opportunity to get long. I don't think we have quite the escape velocity yet, but we are in that area where the buyers, the bulls, are, at least for now, in control. ZB moving higher is very much, it hinges on lower yields. And again, the equities markets accepting that we're at the tail end of this tightening cycle. ZB again starts looking ahead to maybe the end of this year, the beginning of next for the first rate cuts, and starts its journey back higher. Because let's face it, gang, overall, if you step back and look at the last, say, 6 months of bonds, the downtrend is broken and we're really in chop, where we're vacillating between overbought and oversold, and we're oversold right now. Okay, the next market, same narrative, and that's the euro. Getting long the euro is essentially playing a short on the US dollar, and that has been working as long as we wait for zones. So much like the ZB, I was waiting for a zone like this to be able to buy the euro around the 107 handle. Now, every single day, we're going to have a slightly modified daily price movement range. These things are valid for one session. So every single session, we have a new daily price movement range, support zone, resistance zone, and then we re-examine the daily movement specific to the day of the week, and we project a brand new level. And this is what it looks like on the daily. They're the same levels on the 1 hour. You just push it out to the daily, and we're looking for an opportunity in that DPMR. I love that the euro is above the 200 propulsion. If we even were to visit this level, I'd be a buyer, quite frankly, but we haven't. So we're going to stick with the daily, which has been doing a very good job, as you can see. And lately, we've gone from the uptrend. So we finally saw the end of the uptrend, right? And so instead of just buying quote unquote dips, which aren't any longer valid, we wait for an oversold buy, and that's what we're getting here. So after a number of really good, and let's face it, gang, I really want to be open about this. There's going to be one last trend trade. And you could see that was this one right in here. It's going to be one last trend trade. So after getting entries about 6 times between January to early February, we end up with that one last trend trade. And then what's the risk? It's essentially, there's your risk, right? In basically what I like to call the shadow of the zone. That's it. So think about the overall move and think about the size of that risk. Every single trend is going to have one last trend trade. We're still bullish. We're going to focus on the long side, more of an oversold strategy, and that's exactly what we're getting. Thank you, Slow Stochastics. Okay, third setup. I promised 3. Here's the third one, S&P. All right, bullish, north of the 200, looking for an opportunity around 4,100. We'll see what the zone brings us tomorrow, but the zone is very close to the 200. I love this level. The 200 propulsion is basically the 8-period exponential moving average crossing the 200. It's a few other things, but that's the heart of why those white dots light up. If we get a little bit more weakness here, fantastic. That's something we want to buy into. Got really close to that. If not, you could see how close we got. That wick right there is this right here, that wick right in there. So not quite 240, 100, but that's what we're looking for. So we might see some lower lows before we get that opportunity to get long. And then we can start to dive into some of the high concentration weighted sectors, where once the indices give us kind of tip their hand, we can start looking at sectors and then individual stocks. Those are the three that I've got my eye on early this week. We'll follow up on them on Thursday. Now, speaking of follow up, as we continue to move through 2023, I'm going to walk you through, and this is going to be on right here, February the 23rd. We're going to get into what's been working for me so far. You can register right here at simplertrading.com/auto. I just got the registration link today. It's not too late to register. We're going to talk about daily price movement ranges, how to automate your process, combination of tools to have more of a sequential type approach to trading, and then how I've automated just so darn much, where if you're concerned about doing things manually, having to recognize things just from experience, no, we're taking the technology that we have on these amazing platforms and we're automating these things. And that's why I love that link, auto. Okay, gang, that's it for me. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.